Okay, so let's get started and go quickly, being the last person on deck. Next slide. Here's where we begin. Investors may have seen that we released our FY23 results a week ago now, and we were very, very pleased with the outcome in FY23. But just to recap on what we do, ActivePort is a software company. We provide software to the telecommunications industry. And when you look at this picture here, what we're showing is that from a standing start in FY21, when we listed, where we had no telecommunications customers for our software, today we have 24 installed telcos across 27 countries. And we have a contracted target install base of 65 telcos. And what the telcos do with our product is use it for what we call orchestration. Our software lives in a segment of the software industry called orchestration. And by that, we mean the telcos use our product to connect their users across their network to the cloud. And it's our software that presents that interface branded under the telco's brand to the telco's users that let them do that orchestration of connectivity from the edge to the cloud. If we look at the potential revenue from the 65 telcos that we have today, it's $2.1 billion, which is a significant opportunity for us to scale the business up and convert that potential to cash. And that when we've been very successful in doing that over the last 12 months, and we will continue to do that. Next slide. And so if I dig into the figures for FY23, we're very proud of the result. We went from $14 million in FY22 to $20 million in FY23. Most importantly are two things. We had a zero cash burn for the year, and so we hope that we will continue that trajectory and be cash positive in FY24. And also importantly, we exited the year with $4.3 million of liquid assets, so cash and debtors, net of liabilities and creditors. And so we were adequately funded. People would have seen that last week we completed a capital raise of $2.5 million. When you look at our challenge in FY24, it's not finding customers. You could almost argue we have too many of those. Challenge in FY24 is scaling up the business, scaling up our technical delivery capacity to be able to take advantage of that install base that we've built up in FY23. And so the capital raise that we completed in the last week was to help us fund that growth. Next slide. If I break the revenue for the year down into the three distinct parts of the business, the left two columns, ActivePort Software and Global Edge, is our software-driven part of the business. ActivePort Software is the software licensing that we generate from our telco user base, and all of the other users we direct to our Global Edge network as a service portal that we launched in June this year. And so the left two columns are our software-driven part of the business. The right-hand column, managed services, is what we started out with in FY21. And you can see now that the gross revenue from the software part of the business, so ActivePort Software and Global Edge, exceeds the revenue that we generate from our managed services business. And that's exactly what we wanted to achieve from the outset at IPO back in October of 2021. Next slide. If I drill down into the software business, we're very excited about this result. We went from $300,000 of software revenue when we listed in FY21. We've grown that to $8.3 million of software revenue in FY23, which is a substantial growth rate. It's almost 1,000% growth rate in our software business. What's more important, though, is that part of the business is profitable. We generated EBITDA of $2.9 million on that $8.2 million of revenue. You can see on the right-hand column that our gross margin in that revenue was 64%. The great thing about investing in a software company is that as our revenue grows and the recurring base compounds beneath this revenue, that gross margin number should increase significantly from 64% up into the mid and high 80% range. Because we are a software company, we don't carry a OPEX and CAPEX overhead of, say, a network provider. A lot of our license revenue drops straight at the bottom line, and so it's a highly profitable part of our business. You will see there that our headcount in the software business is only 19. So for the $8 million of revenue across 3 major customers, and each customer in the software business on the telco side is generating approximately $3 million of revenue per year for us. We delivered that and the 24 installed telcos with just 19 people. And so we really are focused at the moment on scaling our technical capacity up so that we can take advantage of the customers that we already have. Next slide. Our Global Edge Networks as a Service portal is a self-service portal users can log into and create their own networks, their own SD-WAN networks. The most well-known self-service network portal on the ASX today is probably Megaport. And with Infratil's purchase of Console Connect, probably the second most famous would be Console Connect. We like to think of our Global Edge Networks as a Service product as Megaport for the edge. And so the distinction between what a user can do with our Global Edge product and what a user could do with, say, Megaport's product is that Global Edge focuses on connecting users from their branch office or mobile workers or plant equipment or factories, whatever the facility is at the edge or the person is at the edge, connecting those users into the cloud. Whereas a Megaport product is all about connecting from data center to data center and data center to cloud. And so really this is the front end of those network fabric providers such as Megaport, Console Connect, and others. Next slide. And so people ask us where we live in that ecosystem of what we call transit partners. Global Edge is our retail representation of the ActivePort software, enables retail users to connect into the cloud via the transit ecosystem partners that you can see there on the left-hand side. And then our ActivePort software installed at telcos allows the telco customers to extend their networks to other parts of the globe, also using those transit ecosystem partners. And so ActivePort software acts as an integration point or a facilitator of access into those transit ecosystem partners. Next slide. People ask us a lot about AI. We start in telco by installing, with our partner Radian Arc, we install GPUs, router switches and compute capacity with our ActivePort orchestration product installed across the top of that. So we start with telcos by installing GPUs on those telco networks. And the telcos use those GPUs for interactive streaming services like cloud gaming. But more and more, they're starting to use those GPUs for AI projects as well. And so we're perfectly positioned in the telco industry to help orchestrate, facilitate the deployment of AI projects onto telco networks. And we're working with a number of telcos around the world at the moment to do that. On the right-hand side, you can see Dolly from Databricks is quite a popular large language model that telcos use for projects like interactive customer service. There are a lot of telcos that we're working with at the moment to leverage the GPUs that we've already installed on their networks to operate some of those software products. Next slide. And so what do people can expect from us in FY24? For us, it's really about scale up. In 2021, when we listed, it was a startup. Now we have a significant customer base with a huge opportunity to generate revenue growth. And so for us, it's about scaling up the business. And so we're focused on converting what we've already sold into revenue. We will continue to grow the recurring revenue base, especially through our Global Edge Networks as a Service. We're very focused on increasing our technical capacity to be able to convert more and more telcos to cash. We are working very hard on GPU orchestration for AI. And as our software revenue grows, just naturally as a software license provider, we should see higher and higher margins as our recurring revenue compounds over time. And that is it, Paul.
Many thanks, Peter. Got a few questions here. Let's kick off. Your recent results showed really solid growth in customer receipts. How much of this growth came through existing customers and how much from new customers?
All of the software revenue was new customers. And so there are 3 major customers and a series of smaller customers in the Global Edge product. But the vast majority of the revenue growth came from new telco customers.
Right. And how is your revenue split geographically? Which region do you expect to see the biggest growth come from going forward?
We'll see a lot of revenue out of India. We currently have all of the telcos in India committed to using our product, which is fantastic. Right this very minute, our team are deploying some servers to one of the largest network operators on the planet in India. And so we'll see a lot of revenue out of India and the Middle East and India and Southeast Asia. A lot of revenue out of Africa. Significant growth in the Americas, North America and South America. And Europe is starting to kick in as well with the likes of Orange, Telecom Italia, and a few others. And so I think a lot of our activity is in India at the moment, just because of the sheer size of the telcos. I mean, telcos like Bharti Airtel with 380 million users on their network, Reliance Jio with 475 million users on their network. I mean, these are, in terms of just sheer volume and scale of the deployments, they cast large shadows across telcos like Telstra with 20 million users on the network. And so we see a lot of activity out of India, and then a lot through Southeast Asia and places like Telekom Malaysia, Moritalindo, M1, AIS, and so on, Axiata Group. There's a lot of activity in Southeast Asia for us at the moment as well.
Got you. And you touched on this earlier. AI is obviously changing the scene rapidly. Can you elaborate a bit more how AI has impacted your business?
It's really something that if you're in the AI industry, you need GPUs, and there are only two major providers of GPUs in the world, NVIDIA and AMD. If you're a telco and you're looking for a GPU and you call AMD, they'll send you to us. And so our relationship with AMD is very, very strong. We ship more GPUs to telcos for AMD than any other provider in the world. And so the AI, and so those GPUs, we originally deployed them not for AI, we deployed them for streaming services, but AI is rapidly catching up. And if you're a telco operator and you have an AI strategy, then the natural thing you do is look for a GPU. And in our case, most telcos have already installed our GPUs. And so it's just the natural progression for the customers to come to us and get them to help us do that. So I think AI is going to be a significant part of our revenue in FY24. And I think looking at the projects, they're great projects with really good value for the telcos. So I think they'll stick, and I think they'll continue to generate recurring revenue for us well into the future.
Right. And what strategy are you using to sort of lower the cost line and improve your margins?
It's a balance between not so much lowering the cost. We're certainly lowering the corporate overhead. I'm not a big fan of having a large corporate overhead. I think we need to focus our resources and the capital we have in the technical side of the business to increase delivery capacity. So we're trying to keep a very low corporate overhead. And then it's not about reducing costs in the rest of the business. It's about growing our capacity. But the state of the tech industry today is that you have to grow profitably. And so we need to find a balance between growth, rapid growth, and profitability.
Yeah, gotcha. And just to close up, what's the status of the balance sheet, and are you comfortable that demands on funding going forward are adequately covered?
Yes, so $7 million approximately of liquidity at the moment. I think it's adequate. I think we've got the right balance of resources or of capital available to grow the business at the pace that we need to grow and remain profitable. And so we hope that we hope that the combination of the cash that we have today plus the free cash flow we can generate from our software license revenue is adequate to accelerate the growth of the business. We don't want to be stable. We really want to see that exponential ramp up of software revenue, because with that comes fantastic free cash flow.
Gotcha. Peter, absolute pleasure. Absolute fascinating story. And again, we'd love to get you back towards the end of the year to see how things are traveling. So thanks again for presenting today.
Perfect. Thank you, Paul.
Have a great weekend.